most of these guys, they're really good tradesmen, and they know how to do the craft, and they understand what it takes to get a job of that size completed. But to really think about it strategically in a way of saying, how much can I take on without losing all my hair, or working 80 hours a week? That takes another level of strategy and really sitting down and digging deep.
Less stress, more time, more money. Welcome to the Cash Flow Contractor interview.
Martin, you're not going to believe what happened to me this morning. I don't know if viewers can see it on the full screen or this small screen, but I got a bookshelf up here, and your book, The Profit Problem, is sitting right here. And
out of the camera shot, of course, but that's okay.
Out of the camera. Well, maybe not on the full screen. If someone's watching on YouTube, then they're going to see it. But there's a bathroom right here, and someone shut the bathroom door pretty hard next to me, and the book fell off the wall. And so I don't know if that was a clue for me to get rid of the book off the shelf. It just needs to go, or maybe I need to pick it up and read it. But it kind of fits well into our episode today. I think, Martin, when you learned that we were going to be talking to someone who does construction accounting and finance, your heart leapt for joy a little bit. But yeah, Tim, welcome to the podcast, man.
Oh, thank you for having me. It's a pleasure to be here. I'm excited about what we're going to discuss
today. Absolutely. We're happy to have you. Thanks for jumping on. And you're in Florida, right?
In West Palm Beach, Florida. It's not so great weather for this week. It's been raining, but most of the time it's sunshine and good golf weather.
There you go.
Yeah, I mean, maybe you deserve a week of rain. We have it a little rougher over here usually, but we actually have great weather this week, right, Martin?
We do. It's beautiful. Yeah, we get tornadoes, but you get those giant tornadoes that are about 70 miles across. Call them something else. What, hurricanes?
Yeah, hurricanes, but we can at least see when they're coming. So we have some time to get out and get away if we need to.
Oh, we can see when they're coming here. They're just only about 400 yards away.
Right. And we don't have basements in Florida, so we can't get away from a hurricane by going in the basement. So we gotta make a decision.
Well, Timothy, there's a vacuum of good bookkeeping and accounting help for construction. This is from my experience of years of working with contractors and builders and manufacturers. And they're just, a lot of people have inadequate books if they have any books at all.
Right.
And I'm just curious, I love the fact this is your area of concentration. What in the world made you settle on it, decide on it, and then come to have the opinions that we'll be talking about here? How did you get started?
I grew up in a house where there were good days and bad days. And sometimes there were good years and bad years financially. And my father was a general contractor. He's been in the business. He was licensed since 84. And just watching how he managed his finances and how we got through things as a family just made me understand the construction industry from an accounting standpoint. I didn't seek out to help construction when I first started the accounting firm, but I found out quickly that these guys were in need of a lot of help, and I also needed to niche down to one thing, and construction was just the low-hanging fruit for me. And so my father definitely gave me a big picture of what it's like to have good days and bad days in the construction industry, and kind of how, as an owner, he responds to it. And so I just wanted to be able to create healthy habits for a construction company.
Well, did your dad, now he'll probably hear this.
Yes, he will.
so be very kind. But was your dad a great example or an example of, oh, wow, I don't want that to happen to me?
He was a great example of, man, this is what it takes to work hard and to get somewhere. You know, so I saw him do great projects, big projects, and some notable, things in his industry. But he also spent a lot of money, helping people, and also pleasurable things, So, and it all kind of went off of how well the company was doing at the time. If I got a big project, landed a big deal, we're all going to go celebrate. We're going to have a good time. The whole neighborhood's going to know about it. And then when things slow down, I don't see him as much because he's working, he's hustling, he's going to this job, going to that job. And, it was just always very, very fast paced. So, yeah, it
Well,
was.
do you think, we'll not use your father as an example because he'll be listening, but in general,
Yeah.
do you think people understand whether they're doing well, or are they just managing by the cash in their bank account? That's one of the things I see. I got a lot of cash, man. I'm going to have some fun, and then find out at the end of the job that you're short.
Yeah, most of these guys don't, at least when they're starting out, they're small guys, and I mean 10 million or less. These guys are not really monitoring their projects from an account, using accounting software and sophisticated technology. They're looking at, hey, how much do I have in the bank today? Who do I owe next week? Who do I need to pay tomorrow? Who's been, ringing my phone off the hook? That type of thing. And it's kind of like just getting things paid as money come in, and they're just managing things from a different place, because they haven't been taught these things when they're going through their licensing exam. They didn't, or trade school. If they went to trade school, they're not being taught these things. And so
Right.
It's just, you're being taught the trade, not the financial part of it.
One of the things I say frequently, and it applies to all businesses, not just contractors, is that you will spend more of your time, and by that I mean your mental capacity and your stress time, on things that have nothing to do with what you do.
Right.
In other words, I'm good at building, but I've got to go market, I got to go sell, I got to go bid, I got to deal with bonding companies, I got to be a leader to these guys. It's those things that when people start in a trade or a business, they frequently never even considered those things.
Yeah, agreed. And you have to consider those things when you're thinking about running a business, and if you're trying to grow a business. Like, how do we determine growth and how fast we should be growing, and are we growing? How those things are being determined and decided. That's where you need someone with that financial expertise, or at least knowledge on a basic level, to help you, understand what's going on in your company.
So if you just had to reduce it to a couple of things, what are two things that every contractor has to know or understand anyway? There are more than that, but
yeah, the two top that come to mind is scheduling and estimating. And I know those things seem like, well, estimating seems like a financial thing, and scheduling probably doesn't, but scheduling is very much so a financial thing to consider in construction. And so these things can really throw your whole all your projections off course if you get it wrong. I would even say scheduling is even a little bit more important, because at least with scheduling, if you get it right, the job will get done on time, and then you can get paid on time, and you can invoice on time, and do all those other things. The estimating piece, that would just say, hey, if I get it wrong, I may break even, or I may lose a little bit of money. But usually, most contractors won't lose a ton of money with estimating. They can lose money, but they won't lose a ton of money. You will lose a ton of money if you get scheduling wrong.
I've got a great example of that happened recently. One of my clients had a big job, and they kept real good records of what costs went in and what revenues came. So they knew they had a $400,000 gross profit. Mm-hmm. The problem was they lost money on that one job. The problem was that it took so long to do, that the overhead more than ate up that $400,000, and they wound up in a loss. And the overhead had to be paid by that job because it was consuming all their capacity. So it's not like they could do 6 other jobs and help pay for it. So I think that's a brilliant point. Scheduling.
Yeah, scheduling is one of those things that it's a skill, and I would say estimating is more of an art form, but definitely people need to up their skills in scheduling, because that can kill profit margins, that can kill your business if you just don't get it right.
When you look into scheduling with one of your clients, what are some of the things that you see them do wrong when it comes to their schedule?
I think what I see them do wrong is they don't identify what the critical path is. So they don't know what needs to be completed first before this next thing has to be completed. And you need to understand that critical path, because there's some things in the construction process that can get completed simultaneously, and there's some things that would just bottleneck if this one thing doesn't get completed first. And so they need to be able to understand what needs to be completed first, second, third, and what their order is. The other thing is not get enough money up front in mobilization to mobilize. And so when you don't have enough money, you're trying to actually collect money from other sources so that what you can mobilize and get things scheduled out and order materials and have deliveries shipped and those type of things. And if you don't have those deliveries on time, if the subs are not paid so they can get started, then they're not gonna start the job until they receive their deposit or whatever it is that they're seeking from you. So that can just bottleneck a schedule very, very quickly and put you in a very big financial bind.
Yeah.
So how do you see them doing that? Do people you work with do that with software, or is it just a mental process where they take steps? How do you see people who do it well? How do they do it?
You have a project management software. You have to, especially when you're doing two or more projects. I know it's like, what? Yeah, 2 or more projects, because these projects, depending on the size of the projects, can be very time consuming, and they have a lot of moving pieces, a lot of communication that can be falling through the cracks, or communication that can be under-communicated, or those type of things. But when you have a project management system where everybody's communicating through that system with each other about certain phases of the job, nothing's lost, and you can always go back and fix things when you have a centralized place to go and find that information.
Yeah.
Can you name a couple of softwares?
We talk about that, Martin, with like one source of truth, like having that project management software where, hey,
right,
if I need to know what is happening on this job, what my responsibilities are, I know exactly where to look. And when you don't have that software in place, it's like, you're going and asking this guy, and then you have to, go back and look at some notes in your phone, but you didn't really take notes in your phone. You're looking at text messages, and it's just a mess, right? Martin was going to ask, what kind of softwares do you recommend on project management software front? I know there's so many that are specialized based on the industry or type of construction you're in. Any that you have that are favorites?
Yeah, if I'm looking for like a catch-all, I'm looking at Build-A-Trend.
Yeah,
Build-A-Trend is just, these guys know what they're doing.
Yeah.
And it fits well for both residential and commercial. Mm-hmm. And I use it for both. And all the to-do checklists that they have in there, the different things that you can code, like whether this was a builder variance or customer variance, your leads, all that stuff, and estimating, and it being creating an invoice off an estimate, a PO off an estimate. All these things are just beautiful, and it works beautifully with Build-A-Trend. And I have a tech stack or an ecosystem that I use, which is Build-A-Trend coupled with QuickBooks Online, coupled with Bill.com, coupled with Dex. So there's a couple things that I use to get the organization to communicate efficiently and to work very harmoniously.
Yeah.
With each other. So
yeah, we talk about tech stacks a lot in several of our episodes. Build-A-Trend is a good software, especially if you're more of like a GC, especially helpful there. It's good for certain subs as well that have other subs on top of them. And I would say if you're more of like a service contractor that's doing more like appointments recurringly and stuff like that, there's other tools like Jobber is a good one. Maybe Service Titan are other good ones as well. You mentioned Bill.com and QuickBooks. I'm assuming QuickBooks for the bookkeeping and taxes aspect, and then Bill.com for the invoicing.
Bill.com is for the accounts payable portion. Because Build a Trend coupled with QuickBooks Online, then the invoices will move from Build a Trend to QuickBooks, and then you will just invoice from QuickBooks. That's the way that would work. But with Bill.com, we actually have we have our contractors to create a accounts payable email address, so that way all their subs and vendors can send their invoices to that email address, and then we have all that information for that email inbox forwarded over to Bill.com. So all that stuff goes right into Bill.com, without someone actually hitting the forward button or someone pushing that information in to Bill.com manually. Right. And so now we can start to review what bills we have due and start to approve them and code them inside of Bill.com. So I love it for an account payable solution.
That's great. And then what was the last one there? Dex?
Yeah, Dex is kind of like the thing that I like when, there's always going to be some type of purchases that's being made on the fly. So what you're going to have? Receipts. So Dex is that receipt capture system. So that way, if you have, one or two guys who can go and make purchases on behalf of the company, they can use Dex to upload those receipts and kind of just handwrite, or they can code it right there on the phone too. And then we will have that information at the accountants or the bookkeeping team to be able to see, okay, this is something that was bought today. So Dex is more of like that today purchase. Bill.com is like something I need to pay later.
Gotcha.
And they do ultimately wind up from Dex into QuickBooks. So you've got your liabilities in QuickBooks.
Yeah. Correct. Yep. So once all that information gets coded in Bill.com or Dex, it gets pushed to QuickBooks, and then QuickBooks will then resync it, or because it's a two-way sync between Build a Trend and QuickBooks, so it will update everything inside of Build a Trend.
With Dex, what's the value in, explain that to the contractor of having that in real time in your books, knowing exactly what's being spent on a day-to-day? Why is that so important?
That's important because just imagine this, if you were to capture a receipt when it happened, the likelihood of you understanding where you are in that project tomorrow is goes way up, because now we have, as your accounting team or your bookkeeper team, have the opportunity to actually code that information and get it into the system. So now you can kind of see, where I was yesterday and where I am today. And instead of waiting for the whole month to complete and then to someone to go back and kind of code everything and get everything in the system and then go back and review the reports. No, we want to make decisions on the fly, because we may see that, hey, we're underbilled right now, and it's because of this one phase of the project. So we may need to put 2 more guys on this phase of the project, so we can get it completed, so we can invoice the customer for this phase, so we can get paid and have enough money in the bank to cover our expenses. So you can able to make those type of decisions when you have real time data being captured.
Yeah, for sure. And I think also it's not just about understanding where you at on the job, if you're underbilled, all that stuff, but even just improving your processes. I'm sure some of those day-to-day transactions that are happening because guys are running to Home Depot to grab something that they didn't have on the job site or whatever, make you realize we need to be better prepared for jobs. And so now you go in and you have a better materials ordering process, and you make sure the trucks are loaded before you get over there, because you talk about going back to scheduling. That's a huge part of the reason why jobs don't get done on time, is because you weren't prepared for the job. And you have to make these runs to Home Depot, and then you get stuck in traffic, and then, you had to be there for a full day, but you spent half the day just driving to go get something. So now you got to wait till tomorrow to do it. And, it's a mess.
It's a mess. And I always tell my contractors, if you're not doing POs, then you're more likely going to have these problems, because PO is having a purchase order system is just going to get better over time. You know, you may not be used to it in the beginning, but it's going to improve your processes over time, because now you're going to get better at knowing what needs to be ordered for a job, how much, of this material needs to be ordered for a job, and then getting that over to the subcontractors or the vendors, and then getting those POs approved and getting payments out so you can get those materials dropped at the site and those type of things. Because once you see the receipts, number start to go down and the PO number starts to go up, you're heading in the right direction.
That's good. I think
well said.
I think, really all of this comes back to habit change, in my opinion, as far as like using a project management software. Like there's so many, Build-A-Trend's a great one. There's so many other ones out there. But at the end of the day, it's really about habit, about actually inputting information, tracking information, and looking at it regularly and having that as a part of your culture as a team. Even with keeping jobs on schedule, with not having as many receipts or using POs, it's a habit that you've got to change. And once you can get that behavior changed, then you can really start to see the progress. But otherwise it becomes really difficult. And I think one of the biggest behavior changes that a contractor needs to be aware of for themselves and just the way that they think is not seeing the sale as the profit or the finance aspect of it that they're really focused on. Like, oh, I got the sale, we're good. Now we got money in the bank or whatever. And then also not focusing on waiting until the end of the job to look at the numbers. Not to just, okay, we're going to wait till this is all done and then we'll see what we got and see what our profit was. It's really about looking at it in real time, knowing ahead of time that you have a good margin, which we'll talk about here in a minute, but then keeping up to date with it to see if you're on track day to day. That's a habit that will, and a perspective shift that can really change the way that you operate your business and making sure that you have money in the bank.
Well, what we're talking about here, if you're not doing it, you're a contractor and you're not doing it, is a level of sophistication. We may not think of it as being sophisticated because we talk about it every day. Do you perform this service for your clients at the level of managing the POs and managing their QuickBooks and making the entries, or do you advise them on how to do it? Because we sit here and talk about, let's get some project management software in here and QuickBooks. People aren't going to know how to run either one of them. Well, I mean, right? Isn't that's my experience? Right. And so even if they're fired up, as Khalil says, and we want to start changing our habits, and I realize it, and I'm disgusted, and I'm tired of putting up with all this chaos, I'm going to figure it out. And then you go confront all that. And so I'm always looking for people such as you who will do it on a contract basis. Do you do that? Do you do that all over the country?
Yeah, we serve contractors all over the country. Have a couple guys in Colorado, Wisconsin, and maybe soon to be Arizona. So that's a good question, Martin. What we do is we work together with the construction company. There's a point person, because there's somebody who's uploading the receipts, or there's someone who's creating the POs, because good as we are, we don't know the cost code for every single thing that's being purchased out there. And so there's going to be a tag team type of action that happens. So we make sure that everything goes into the right place, and we make sure that every expense gets captured and gets coded correctly. And what that means is, because we're tracking that, hey, this came through the bank account, but we didn't see a PO for it, or we didn't see a receipt for it. So we need to know what job this goes to. Do you have the receipt? Can you create the PO? And that's part of like developing that habit of, just creating POs and capturing receipts. So usually we're either working with the owner directly, who doesn't have an office admin, or we'd be working with the office admin, to get these things accomplished. And so the accounts payable piece is a lot easier because that's more automated. It's coming through the email system to bill.com, and then we have an approval process that goes on. So someone at the construction level, whether it's the project manager or the owner, he's approving or she's approving those POs and or those invoices. And so those how those things will get, but we're working together with the construction team to take care of this. It's not a one-sided thing. It's not like you hire us and then you can just drop everything and just stay out in the field.
No, there has to be communication, and I presume there's a great learning curve there of where you do begin to understand what things are coded without having to call and ask somebody. Have you ever seen anybody transition off? In other words, they start with someone like you or with you, and then over a period of time, they can bring it in-house because they're getting bigger, they're more profitable. I don't know if that's in something you think about or worry about, but has that happened?
No, it hasn't happened yet. I mean, of course, my career has been short-lived, so I haven't had a client who aged out of me or grew bigger than what I could handle at this particular time. But I'm assuming that at some point it could happen, and I would love to see it happen.
Well, it might be more effective to have your whole team. You're purchasing the percent that you need from a team rather than hiring a bunch of people to do it for you. So,
say that again. I'm sorry.
Well, I'm just saying it could be that it doesn't end because it's more cost effective to have your whole team on a as needed basis than it is to hire 3 people to do it who are there full time, and maybe you don't actually need that.
Yeah, what you get with us, because sometimes what you pay us may be a very hefty salary for one person who will be in this company, but that one person can get sick. That one person has a different labor burden rate, and it can change, just depending on what you're offering as a company. And so when you hire a firm like ours, then you have my whole company that's essentially being hired. And so if a bookkeeper gets sick, the work still has to get done, still will get done. And you have several people working on just your one company and helping you to review the things. So you just have more minds at the table,
right,
to help you strategize and to understand your reports and to just help you to really be a great sounding board. 'Cause I say sometimes I consider myself a therapist for my clients just because of all the other things that come with the job.
We understand that, don't we, Khalil?
Yeah, we do. And I think also the value in having, I was even just working with someone on their org chart on Monday, and I think that the value in having someone that you don't have to really manage, like you do need to manage your contractors that work for you, like, you need to have that relationship, build that relationship. But as soon as you bring it in-house, you do have to either hire someone who can manage that person and give clear direction, or you have to do it yourself. And I think sometimes when something's over your head, especially if you're not savvy with bookkeeping and financial statements and all that, and the tax side of it as well, it's really great to have a trusted advisor. I mean, that's our whole trusted advisor series, right, Martin?
Right.
Yeah. So really interesting. So I want to get into a conversation around margins a little bit. It's such a big part of what we talk about on the show. It's a big part of what you help contractors with. When you work with a contractor for the first time, maybe what is that first step or first conversation that you have about margins?
Yeah, so the first step I have about margin is really about vision, because I need to understand where the company is trying to go, because we need margins to support that growth. And so are we trying to become a $10 million company, a $20 million company? Are we trying to offer benefits next year? Are we trying to hire a new, project manager tomorrow? So it's just what are we trying to do? And so they have to share that vision with me. And then once that vision is shared, then I can say, okay, what is your desired operating profit margin? Because that's going to be different for everybody. No two construction companies that I know of have the same desired operating profit margin. And So once we identify what that is based on what your visions are for the company, now we can start to look at some real numbers. And so we need to create a baseline because we can't decide anything without having a baseline. And so my whole thing is, if the books are not ready, let's get them ready. Let's see where you are today versus where you were yesterday, and then get a baseline. And then now we can say, okay, well, this is what the margin needs to be to just break even, and then we can talk about other things later. But let's first, getting you where you're at least covering your operating costs.
And when you have that first conversation and you finally, because it is a process to finally get the books in order. I know it's not like you have that first conversation, they give you a login and then it's good to go. But once you do have those books in order and you know their numbers, do you find that people are surprised by their margin, or they're completely aware that they've got a good, they knew their margin was accurate and right, and it's what they thought it was?
Hey guys, can we just jump back real quick and define margin? Because you've talked about what I would call a net profit margin, means bottom line, right, as a percentage of sales, and then there's gross profit margin. Could you maybe talk about those two things so they know?
Yeah, sure. Let's start at that base level.
What we're being specific about.
Yeah. So I'm talking about the net profit margin. That's after cost of goods has been paid, and after all operating expenses have been paid. And so what is that? What do you have left over?
Hey, and let me ask you, what do you typically see? I mean, 2%, 5%, 10%, 20%.
I've been seeing somewhere around like 5%, like to be that average. And I don't think no one's really trying to grow a huge company, on 5% profit margin.
Let's put that in perspective, because that means you sell $1 million worth of stuff and you wind up with a net profit of $50,000 before taxes, and you pay $40,000 or 40%, let's say. That might be a little high. So you got $30,000 left out of $1 million. That's what that means.
That's what.
And that should make people mad.
Yeah.
Look how hard you work for $30,000. And what I used to say, if a box of fittings falls off a truck, you're in the hole.
Yeah.
You don't have enough to absorb any mistakes. Of course, mistakes never happen, right? Or cost overruns, or somebody who doesn't pay you, or to finance retainages for 3 years because that's how the guy contract you signed reads. So, but yeah, 5%, basically we'd say, and I think we agree, is not acceptable.
It's not acceptable.
Yeah.
No.
First target for people I work with, and it's the first target, is 10.
Mm-hmm.
So you sell $1 million, you got $100,000 on the bottom line, and there are people who do 20.
Yep.
And they live different lives.
They definitely live different lives, and these guys also understand cash is king. You need to have cash in the bank. I can't tell you how. I don't think there's been not one construction company that came to me with a savings account that had money in it. I have to say it because they may have had a savings account.
I'm with you.
Yeah, but it didn't have any money in it, and that's a problem. And some of these guys live off of their loans and lines of credits, and that's another bad sign and bad indicator for me that we may be in a cash crunch, and we need to get out of it.
We had a guy I worked with 3 years ago. At the end of the year, he made $350,000 as a net profit. He had $750,000 of accounts receivable, and he had a bunch of inventory, but he didn't know what it was worth.
Oh man.
Yeah, he'd been around a while, but basically he was loaning out his bank loans to his customers as receivables. But it can be really tough.
Yeah, that can be tough because a lot of people don't understand loan payments come out of your profit margins. And so when you think of that, that's another thing that's kind of tanking your profit margin. Because if you take out $1 million loan, they may give you $1 million a day, and then you may use it on some project, or some other thing, and then it's financed for 20 years, 15, 20 years. But every time you make that payment, you're paying that out of your profit. Because you're saying that I'm taking this loan out because taking this loan out is actually going to yield me a higher profit margin. So that's the whole reason of me taking it out.
That's why.
Yeah, because I see that it's going to grant me this opportunity around the corner that I wouldn't have unless I had the cash, because I don't have the money to maybe mobilize up front or to buy materials, those type of things. But when you're just taking it out because times are hard, then that gets a little scary.
Yeah, I always like to talk about that fact that what you spent the loan for may be an expense, but paying it back is not. So our little example of somebody who makes 5% and pays taxes and has $30,000 left over, if they have $45,000 worth of loan payments over that same year,
yeah,
cash, they're in the hole.
They're in the hole.
Yeah,
they're in the hole, and that's scary.
Well, on margins, so we talked about net profit margin, meaning the bottom line as a percentage of sales, but there's also gross profit, which is the margin that people use in bidding, right? Mm-hmm. That's your share of the sales dollar. So you sell $1, but it costs you 60 cents worth of material and labor. What you have left really is 40 cents, which you have to use first to pay your overhead. And once that's paid, it begins to accumulate as profit. Yep. So how do you see people, what attention, how do people bid? That's my question. So how do they estimate a job and put this bid in and say, yeah, that's a good bid? What do you see as a methodology for that?
Some people do just what you just said. Yeah, that's a good bid.
Wow, that would be the biggest sale we've ever made, biggest project we ever made.
Yep, that was it. That was a good bid. Some guys have these Excel spreadsheets that they come up with, but very few are really doing like a true takeoff, where they're counting up like every cent of like what does this nail cost? What does this screw cost? That type of thing, and really putting that into the equation and then marking that up. And some people don't understand that, the markups, they're not the same with the project margin that you're gonna yield. So I may mark up material 30%, but I may yield a margin of 15%. So you have to understand where I need to mark up different things, whether it's labor, equipment, subs, and material. And those markups can be all different types of markups. I can have a 5% markup on labor. I can have a 20% markup on material, those type of things. You can play around with those markups, and then with playing around with those markups, then you can see, okay, what did that yield me for a job profit margin, and is that acceptable? Well, that just all depends on, again, going back to your net profit operating margin, because now you have to determine how many jobs do I need just like this, and that's going to run perfectly, because that's the only way that I'm going to yield this margin, because the job has run perfect. and then factor that into, okay, I need 10 of these jobs for this month to cover, my operating costs. So I need, 50 of these jobs to take care of myself for the year. So then that goes down to estimating, like how much in revenue do I need to be estimating to make sure that I have landed enough of those jobs for the year to cover my operating margin. So you need to come up with a closing rate, like how good are you at closing and really winning those bids, those type of things. So all that kind of data needs to be tracked and checked. And you can very easily see, if I don't have a project management system, it's just very hard to track all this stuff.
Wow, you are so perfectly on point. I just can't tell you how much I appreciate hearing this. I call it intentional bidding, and what you just said, capacity. In other words, at this margin that I get, I have to sell 10 jobs, which is, let's say, 10 million a month, or a million a month, whatever. Do I have the capacity to do that? And you look and say, there's no way that I can afford the materials and to pay the labor and overhead while this job, I can't do 10 million. And you need to know that, because if it's not even possible, then go do something else. That of course is not my suggestion, but it has to be possible. And I don't know if I know they're out there, but I don't know if I've ever encountered a contractor who really thought about, this is my capacity to do work. Financial capacity, people capacity, number of project managers, accounting support. This is what I can do. What margin do I have to have? They don't think about it that way.
I haven't come across a lot of people who think about it that way. Most of these guys are just, they're really good tradesmen, and they know how to do the craft, and they understand what it takes to get a job of that size completed. But to really think about it strategically in a way of saying, how much can I take on without losing all my hair, or working 80 hours a week, that type of thing. That takes another level of strategy and really sitting down and digging deep.
Right.
And so,
and do you work on that subject with your clients?
All the time. Yeah, I'm big on education. I'm big on strategy, and so that's a huge part of why I love what I do, because I get to tap into all these other different arenas. It's not just the numbers game. It's also we're growing a company, and we want to see these guys live healthy lives, where they can spend time with their families, they can take vacations, they can not just have a job that they're managing, but actually manage a company. And so that's kind of always the goal for me. And I only want to work with people who want to get there.
Well, I love it. Two other things on bidding real quickly, and I think you already touched on them, is a lot of times I want to see a bid process, and people say, oh, we use $1.50 a square foot, or we use X dollars per yard, or, linear feet or something like that. I said, well, that might be okay. When was the last time you jumped into that $1.50 a square foot and analyzed it? And of course, with all the changes in the last 3 years, they're changing every time you do it. So that what you said about what's a nail cost? I say, I don't want to have to do that on every job. I said, well, your suppliers are doing it to you because they're raising the cost of that nail a half a cent when their costs go up and pass it on to you. Absolutely. And I tell people we can't be the price increase buffer between the supply chain and our customers. We have to do it. And one other thing, just real quickly, because you've mentioned margins and markups. I was at a place last week, a prospective client, and I asked to see how they bid. So they had all their numbers there, and I don't know whether they got them by so much a square foot or what. And then they said, well, we had 10% for profit and we had 10% for overhead. And I said, well, I don't care what you called it. You added 20% to the price. They said, so we got a 20% margin. I said, no, that's a markup.
Yes.
20% markup is a 16% margin. And a 40% markup is a 28% margin. And if our listeners don't understand the difference between that, we could talk about it, but call Tim and find out what the difference is, because there's a big difference, right? Huge
difference. You have to understand that. You have to get that right. And once you start to understand the difference between markup and margin, you're just going to become a better estimator. And that's why I say it's more of an art form, because you start to play around with these markups, and you get to see, okay, what margin do they yield, and is it acceptable for my company? Because that's the reason why some contractors, or you may have 5 contractors bidding on one project, but one gets awarded, because some guys say, hey, I can't do it that cheap. It's going to hurt my company. it's worth me going out bidding 10 other jobs to get the right margin than to work this one job that I know is killing my margin and ultimately killing my company's profit.
Right.
And so I just can't take this on. It's going to do too much damage for me, you know.
That was going to be my next question, because when I talk to people, they say, well, you talk about margins that I need and all this kind of stuff, but there's a market out there and I can't sell it for that. And I think you just answered that well. Well, go find ones you can and give them a reason other than price to use you, be really good and all that.
Yeah.
But you can't sell it for that. You can't sell it for the lower bid either, because it's death by 1,000 cuts and your company's going to go away, right?
Yeah. Yeah, you need to. One other data point I look at is how much of salaries is eating up revenue, because that could make you bid higher when you don't necessarily have to bid higher if you can lower your salaries. Because if those salaries are eating up more than 30% of revenue, then that's a red flag in my book. I like to keep salaries at 30% or below. And we need to do that so that way we can grow the company steadily. And as it continues to grow, then your salary will grow with it. But some guys, they get a little anxious and a little hungry, and they just want to have, big paydays up front, year 1, year 2, year 5, those type of things, and don't understand that the sacrifice has to be made up front so that way you could enjoy life a little later. But that's something to look at, because if salaries are really heavy, then you have to have really high margins so that way you can cover, your overhead. But salaries is one of the biggest bleeders for a construction company, and you need to kind of find ways to plug that up.
Well, you mentioned one reason, and that's people kind of want a payday and get hungry and start hiring people early. You see any other reasons that salaries are bloated in companies?
That's a big one. With just getting hungry, wanting those big paydays.
One thing that I see is there are people who, and this sounds harsh maybe, but there are people who really don't do anything in your company, and they've been around a long time, and you can't really justify their salary, but you really don't want to terminate them, and that's a tough decision. But you have to cut the waste out of your company, even if that waste winds up being a person.
True. And a lot of times it's hard because it's family. And especially, a lot in construction companies. Because in construction companies, these guys like to work with people they trust. And who can you trust usually is family. And so I may have my wife doing my bookkeeping. I may have my mother, answering phone calls and doing some filing things away. But at the end of the day, if they're not the best at it and really helping you move the company into the future, then you really need to reevaluate their position and maybe rearrange them around, put them in different seats on the bus, or just say, hey, we gotta hire somebody who's competent and has the skill set to help us grow, which is going to ultimately help the whole entire family. And so that's kind of what we need to frame up for these owners.
Well, I want to maybe change the subject just a little bit, because one thing that happens, and you've alluded to it, when people are maybe running at a loss and don't really know it as they start borrowing money, when should a contractor get a line of credit or maybe a long-term operating loan? One thing you alluded to was not to cover up losses.
Right.
But what?
So I would say this, you're going to have a hard time getting a line of credit or getting a loan if the books are not healthy. So you definitely want to have healthy books, profitable years. That's the time when you want to get that line of credit. When things are going well, when everything is going well, that's when you should be going out to get a line of credit. I always recommend getting a line of credit because it just gives you another layer of protection when you know the money is coming, but that pay app just got approved yesterday and it won't be into your bank account until 30, 45 days from now. So now let me go ahead and take the money out to cover whatever expenses I'm going to have in those 30 to 45 days. And I'm going to replenish that line of credit back once I get the pay app inside of the check into my bank account. So that's how we should be using these lines of credits when we're running this construction company. Not when things are just slow and I just need some money to keep my guys going. We need to look at some other things.
Have you ever encountered what I call gangster loans? And I see them a lot. And a gangster loan to me, and they're not crooked, and there's actually some places to do it. But somebody calls you up, they go, based on your bank account, just send us your bank statements, and we'll put $200,000 in your bank today. And then they start taking it back literally tomorrow. Yeah. So you feel real good about it because you made payroll, but then all of a sudden it's $3,000 a week or $1,000 a day or something. Have you ever seen people use those, and what are your thoughts?
Yeah, I've seen it all the time. I've only seen it once, and it worked. And where the company, they needed the money to just float material cost and labor costs, but they had huge, when I say huge pay apps that were being approved that was gonna pay that back and leave profit in the bank. So it was just, the profit was they did such a great job on the estimating side that when every time they made money, they got approved pay apps, they were actually getting money to cover operating costs and profit at the same time. So they didn't have to wait till the project ended to actually see all their profit. So that's like the only case I've seen it, work.
Well, and one reason is it's a great reason to get a line of credit because that's what it is. It's emergency funds available if you need them. Hopefully you don't even plan to use them. But by the time I see most people go to these gangster loans, it's because they're desperate and they've been suffering. It might just be receivables and a cash crunch, but a lot of times it's losses, and it won't ever lead you out of the hole.
Yeah, it could definitely be those losses, and a lot of times too, it's just these guys are not getting invoices out on time. I see a lot of guys who just, I got this done, I got that done. I just need to find time to invoice. And I got $100,000 worth of invoices to send out. I just haven't done it yet. That's not good. So that shows, that's a clear sign that you need some help. This business has gotten, kind of beyond what you can handle by yourself, because if I can't get paid on time and it's because of me, then that's a huge problem.
Right. It's a huge opportunity. Yeah. Fix that.
And let's fix that quickly.
Right. And one thing, I don't know if you've ever done this, but I ask a lot of people, have you ever forgotten to invoice anybody? And I don't think anybody's ever said no, they hadn't. And I also say, if they try to say no, I say, oh, how do you know? Well, that's a good question. But people forget to invoice.
They do.
It winds up being a week and 2 weeks because they're out smoothing the next slab. They're too busy to invoice, like you just said. And then it's a month, and then it's 6 weeks, and they remember it, and then they think, oh, I'm so embarrassed. I'm just not gonna send them the invoice. And we just, oh my gosh.
Yeah, we can't do that. We can't do that. And we got to get invoices out on time. So that's the main thing. I have a bookkeeper priority checklist that my bookkeepers use, and we go over it, pretty consistently to let them understand what's important to me as their supervisor, and also it's important to the clients that we serve. And number one is making sure that payroll is ran and the people are getting paid. Right there on number two, I mean, it's accounts receivables. We got to make sure we're collecting, and so that's how important getting your invoices out, because that's what's going to help run the company, and you don't want to have any lag.
One thing that has come up recently in an example is you're a couple of days late with your invoice, but not really, because the general pays on the 20th. If they get it on the 21st, that's
Right.
30 days before they consider it and approve it, and there's 30 days before they pay you. So that little 2 days costs you 30 days.
Yeah, absolutely.
Yeah.
Absolutely.
Prompt billing, huge.
Prompt billing.
Huge.
Yeah. Man, this is, I feel like we could talk, especially you two, I feel like I could talk about this for hours and hours. Tim, what's it like to get started working with you, and maybe walk us through that process for listeners that, they've heard us talk about it enough. They see that, you're very knowledgeable. You have the capacity and capabilities of helping them. They want to get started. What does that really look like?
Yeah, so first step will be what I call a financial blueprint. And with that process, that's where I give you a checklist of things that I want to review. So I'm going to be looking for your last 3 years of tax returns, personal and business. I want to see access to your books if you have it. I want to see your depreciation schedules for the equipment and vehicles and things, those type of things that you own in the business name, not in your personal name. And because some people get that kind of confused. Yeah, we have a company. We have a company truck. Okay, who named the company truck is in? It wasn't my personal name. Oh, it's not a company truck. So those type of things. And then I want to know how the different loans you have, line of credits you have, and I kind of just want to take a real deep dive into your financial data. And once I've understood that, I put together a presentation for you to tell you what I discovered and also to provide solutions for you. And once you decided, hey, Tim, I'm glad that you told me everything that was wrong with my company, and but I love the fact that you gave me some solutions as well. I'm ready to take the next steps, and then we would just from there start the onboarding process. And the onboarding process, depending on the size of the company, can take anywhere from 90 to 180 days, just depending on the size of the company, because we're implementing so many different things. I mean, you got to think about it. If you don't have books, then we're getting your books cleaned up, and then we're getting them ready, and then you may be crunched for taxes. So you're like, I need my tax returns completed too. So then we got to get the books clean so we can do the taxes. Then we're trying to implement a project management system, get you trained on that. Got to get Bill.com set up. Got to get Dex set up. Got to get you using, trained on using those systems. So you're meeting with us frequently, and you're meeting with us every week. The bookkeeper's meeting with you, and I'm meeting with you strategically, depending on what we decide, every 2 weeks or every month, or sometimes it's weekly in the first beginning of the process. So it's a lot that's happening, but we don't want to overload you. Because you may have been running this company for 20 years. To try to change everything at once would be very scary and be a disservice to how, we're onboarding you as a client. So we have to do things strategically and say, hey, let's do this first. What are the quick fires that we need to be putting out so we can get you up and running? But definitely you're going to have a great system in place, after about 6 months of being with us and really, going all in. You have to be all in.
Yeah. And, I think for a lot of contractors, it's always, well, what does it cost? I'm sure it's different for every size contractor and, depending on what you come in with, where you're at with your books, because that can determine a lot. But on a rough, range, what does it cost a contractor to get started working on this type of stuff?
I say depending on the size of the company, there's no contractor that I work with who's paying less than $2,000 a month.
Okay.
So yeah,
Okay. So about,
Is it front end loaded to get caught up?
it is front end loaded to get caught
Okay.
up. So it depends on what we're doing. Like if you're saying, hey, let's clean up last year, 2022, and then also get caught up for this year, 2023, then of course there's some front loading there because we're going backwards to 2022 to get that cleaned up and to get the taxes filed. And then we also got to get caught up because right now we're in April, so we got to get from January to now, get you caught up there too. So, and usually those things have to happen in sequential order. We need to get 2022 done, and then so we can get 2023 on the books as quickly as possible.
yeah. And then part of that 2000 and maybe even the front loading a little bit is does that include getting some of that tech stack set up? Like if they're not using Bill.com, if they're not using Dex, if they're not using QuickBooks, are you setting all that up for them? Builder Trend even?
Yes, we're setting all those things up. Of course, there are some things with Builder Trend that they will have because Builder Trend does real good with their customer service. So they'll get
do
you
the
set up on some
onboarding for
things,
them.
but yeah, they'll do some of it. For a good portion of it. But all of my team, we're Builder Trend certified, so we understand how to use things that are even non-financial related, like the scheduling, how to help you get your to-do list checklist set up and do those things, and how to use the estimating tool, and how to even use the Builder Trend takeoff software. So those different things. But we really like to get great companies to work with. So I don't work with a ton of companies at one time, especially during the onboarding process. If I'm onboarding, 2 or 3 construction clients, then more than likely I can't take any more than that because we're just doing so much. And I need all of my attention to be on these guys and making sure that they're successful.
And then once you've gone through that blueprint process, what's like let's say I've been with you for 6 months. What does our working relationship look like after 6 months? Are we meeting weekly? Are we talking regularly? What does that look like?
It just depends on what packages they sign up on. They have things that they can meet with me, have an accountant strategic meeting. Like I said, either every 2 weeks or every month. And that's when we're taking a deep dive into the financials, where things are, understanding the numbers, reading the story, and just kind of seeing how things are speaking to us, and just having some strategic conversations, even if it's off topic. Because a lot of times I get into their personal lives, and so because their personal lives are affected by the business life, and so we're having conversations and those type of talks. Then they pick on a package of whether they're going to meet with the bookkeeper either weekly or bi-weekly. And so that's important because that's when the bookkeeper is going over everything accounts payable, accounts receivable, making sure that everything has been collected that needs to be collected, everything that has been coded and paid that needs to be paid. And so just making sure that all the numbers are in and they're good.
Yeah.
So they have ways to pick those packages as well, just depending on how busy they are.
Just a real quick question related, but a little different. Do you do percent completion? And in other words, do they have an accurate WIP, work in process, so they really know their profit monthly? And
yes, that's the beauty of Builder
companies.
That's the beauty of Builder Trend software, and that's why I like it so much, because the WIP percent completion is already built into the software. And so as things are being estimated, POs are being approved, those type of things, all that's kind of going in, and you have a working work in progress report that's always fluctuating, just depending on how much what information is being fed to it. So yes.
Okay.
Yeah, I think
really important.
It's obviously a lot of people can sit there listening and think, oh wow, minimum of $2,000 a month. I have a bookkeeper right now, or my accountant's much less than that. But I think the things that they're missing on probably with their current accountant is that, one, they're not construction specific. They don't have a huge background in it. And so just the value of someone understanding truly how to operate your business and that works with other contractors that are successful is so valuable. because the strategies are different, and just the understanding of what works is different. But then also that tech stack and the implementation of it, and then the accountability of it is a huge differentiation and something that is well worth the 2,000. I think if you're only looking at it as a service, you might struggle to see value or to think of it as valuable. But if you start to see it as a strategy and you start to see it as, really replacing or filling up a complete department of your org chart, then you'll really start to see the value there, because otherwise you're having to do this on your own. You're having to hire other people and manage those people to do it. So I think this is a really great service you're offering, a much needed thing for contractors. And it's really cool to see someone's out there doing it so holistically. We've really appreciated having you on.
I appreciate it so much, Khalil. My heart is in this, and I get so much joy out of seeing guys just transform. Like, hey, I hope he doesn't get me on this because I have a client, but I don't think he would. But I remember his guys were submitting their timesheets by text message, and just making the shift of moving them to a time clock system and getting that time clock system to integrate with the payroll system and having that process all automated changed his life, because he used to spend, a couple, I don't know if it's an hour or two, but just going through the text messages of every single employee and saying, okay, they work to this day. I mean, I think they would text their start time and text their end time.
Yeah.
So
and convert that to hours. Yeah.
Yeah.
Yeah, that's not like having a geofenced app that you can't submit your time when you're at the convenience store on your way to the job. You can't submit until you get there.
Yeah. So I was so glad, and honestly, this client I'm talking about, he is my rock star client, because when I say he was all in, he said, Tim, whatever I need to change, you tell me, and I will learn it, and I will implement it, and we would just get through it. And that's what he has done, and he has committed to that process, and his business is on its way to doubling its revenue that it did last year. Yeah, we're on track to double the numbers from last year.
Well, and that's such an important aspect of it, is that you do have to be all in. If you sit here and you say, hey, I'm going to hire Tim and we're going to be gold in 6 months, that's not really how it works. Like, I'm going to hire Tim.
Right.
I'm going to be all in. We're going to bust our ass and we're going to get to work on this and make it happen. Then you're going to see something that's really fruitful. It's not that it's a silver bullet from Tim's company. It's really that if you work with Tim, he's going to be an excellent guide to help you get up this mountain. And you can try to go up the mountain yourself, but Tim knows the path. And you're going to have to carry your own stuff. You're going to have to work really hard. He's going to give you a hand every once in a while. But that's the best way to get to the top of the mountain. So, appreciate having you on, Tim. Thanks for all of your knowledge. People go check you out. Where can people get in touch with you?
Yeah, so I'm on Instagram, I'm on LinkedIn, and I'm on Facebook. So those are the 3 platforms that I'm on. And of course, you can always go to my website, either G+F.com or constructionfinancialblueprint.com. Constructionfinancialblueprint.com.
Okay.
So those are all the places to check me out. And also my YouTube channel. I keep forgetting that, but I got some videos on YouTube that kind of gives a little bit more information about what we do and how we do it. But so the YouTube, you go to YouTube at G+F, GPLUSF. And then, they got that at thing now, so you can kind of search that way.
Okay.
You'll find me.
We'll put these in the show notes too.
Yeah. Perfect.
Cool, man. Well, we hope to see you around again soon.
Yeah, definitely. I enjoyed it.
Yeah.
And I just have to say in passing too, $2,000 a month. Name me an employee position that you could hire for $2,000 a month. Right. Seriously.
Yeah. That's what I said. I said, it's sometimes it's hard for people to wrap their minds around it, but when you say it that way, like, what employee you going to hire who's going to be that skilled at what we're doing for that amount of money?
Yeah,
know.
it can't be done.
Yeah,
Can't be done. Well, appreciate it, Tim, Martin. Thanks as always. And thanks, listeners. We'll see you guys soon.
All right, see you guys soon.
Thanks for listening to The Cashflow Contractor. Check out our website in the show notes or visit thecashflowcontractor.com.